In this video, I want to show you three important and probably one of the most important aspects of trading the strategy, and that is showing you the source, the breaker block, and the institutional order flow. So just to give you a brief overview, the source is basically the highest candle wick of a peak formation high or a peak formation low, the highest candle wick, and obviously the whole candle, the highest candle wick, and body of a high or low. So that is our source, and a breaker block is basically an order block that gets broken. Okay, and then obviously our institutional order flow is the flow of orders in a direction with order blocks. Okay, so our source is the highest candle wick and body of a high or a low. Then we have our breaker block, and that is basically an order block that gets broken. And then we have our institutional order flow, and that is the flow of orders in a direction using the order blocks. Okay, so those are the three elements I want to show you. So let me just show you how to mark up the source, because that one can be a little bit more difficult than finding the breaker and following the institutional order flow. So remember now, our source is the highest candle at the peak formation high and the peak formation low. So we call it the PFH, which is peak formation high, and we call the lowest point is the peak formation low. Okay, so let's find ourselves in this range over here. So from this top of this area to the bottom of this area, let's find ourselves a source. So I generally use the light blue color to identify the source on the chart. And sometimes as price is trading, we don't know where the high will be, but you can follow price, and when it makes a high, we can see that this candle here, this bearish candle, created our source. So that is our source candle for this peak formation high. So that is our peak formation high source, and it's the same as the order block. You mark it up from the wick to the wick, encapsulating the whole candle. So that is our source for the peak formation high. And again, we will choose this candle over here for our source on the peak formation low. So that is our source for the peak formation low. And again, let's just find the source candle for this peak formation high, and it is that one. So you can basically mark that one up. And if you look over here, there is another source peak formation low candle of that one, and that is our source right there. So it's not too difficult to find the source. The source is basically the candle that was the highest or the candle that was the lowest of the price action. We made a peak formation high or a peak formation low. Okay, so that is our source. So let's move on now to our order flow, because the breaker block will make sense once we follow the order flow. So we don't need to explain the breaker block, because we will identify it as we follow the institutional order flow. Okay, so starting at the bottom left hand corner of the screen over here, I'm going to start following the order flow. So I'm going to use, as normal, the red box to identify order blocks. And we can see our first order block was created right there, and price then rallied up. And what did it do? It created another order block. So we can see, we can mark that order block up inside this order block. And then price rallied up and it created another order block. So there is our order block, and price rallied up and had a slight pullback. And if you notice that there, this candle over here, it was engulfed and there was a big move to the upside, which created a bullish order block. Price then rallied down, and you can notice how it closed outside of this candle, but then immediately rallied straight back up into the order blocks, creating this candle over here with two green candles. This created an order block in itself. So let's just pull that across here. So that is quite a large order block. It was quite a large move to the downside, but those two candles created our order block. And if we follow up, price rallied up and created this first order block over here. Price then rallied up and rallied back down and maintained our order block structure. So we can see over here that price rallied up, bouncing from this first order block and rallied up. So again, another order block was created. Now, generally, you can see that there's multiple order blocks inside other order blocks. And to neaten up the chart, I generally just remove the order blocks that are inside or encapsulated in each other, so that the chart is basically less cluttered. Otherwise, you've got too many boxes and you can become distracted. So the goal is to keep the chart as clean as possible, easy to identify what's actually happening. So again, here there's a lot of clutter there. So we just clean that up, and there, so we followed the order flow with the order blocks into the first one, created another order block, moved up, and basically bounced up over here and creating another bunch of order blocks in this one. Price then rallied up, created this order block. Price then continued up, and you can see here that when there was some compression or accumulation or consolidation, depending on which term you want to use, price wicked inside of our order block, but then bounced back up. Okay, so knowing what we know, that now price has rallied up here, but price has not continued in an upward trend. So we now mark up this candle over here as our source. So that is now our source candle. Okay, and we will also see that this is actually an order block, this candle over here. So when price came down and wicked into this order block, it created another order block and rallied back up, but price was rejected, and this was the highest candle of that move. Okay, so that was actually an order block, and you will notice that now price has continued downwards, and you will see that another order block over here was created. But notice that this order block did not be responsible for any large move to the upside. So it didn't actually make a higher high. So what we're looking for essentially is basic market structure of when price is moving in an upward direction, we are following the order flow, and eventually when price does not make that higher high, we are looking for market sentiment change, or the order flow has changed. Now, some people will tell me that this here is an M pattern, and that is a shift in market structure. And yes, that is correct. So this is a retail concept, if you want to call it that, but it is just a pattern that does occur because now price is moving in an upward direction. We're following the institutional order flow using the order blocks, and instead of making higher highs, well, that pattern is created because no more higher highs can be created. So that is the reasoning for this pattern creation. And it's not science or anything. That is the general formation at a peak high, and you could look for something like that. It's sometimes a little bit easier to see it if you change it over to a line chart. You might see that M formation happening, but we're not trading M formations or W patterns. We are trading the institutional order flow. So forget that this looks like an M. It doesn't really matter what it looks like or what letter. We are following institutional order flow. Okay, so back to where we were. We had created this order block over here, and you can say that this was a very narrow forming order block, and it failed to create any new higher highs. So in fact, price then continued downwards instead of continuing upwards. So that order block then created this bearish order block right over there. And then that bearish order block was responsible for breaking the low of this candle, which was our last bullish order block before the source was created. So it's important to remember that the last bullish or bearish, in this case it's bullish, order block before the source. So that is applicable here to our order block. So this was the last bullish order block before the source was created, and instead of making higher highs, we now broke that structure and started making lower lows. So we can see that there is the low of that candle, and this candle here, so the bottom of this candle right there, this black candle, was the candle that closed below our order block. Remember, it's important that we don't use wicks. We wait for the body to close outside of our order block or our source or our breaker to confirm price trend. We don't want to take it prematurely and then find the result of a bad trade. So we use the bodies. So in this case, this was the first candle that closed outside of our bullish order block before the source. So this bullish order block now becomes our breaker block. Okay, so that is now our breaker block. Okay, so now we can start looking for a change in direction. Now remember, the order flow, the bullish order blocks were creating higher highs here, and we were following it by using the institutional order flow of bullish order blocks. Okay, and now we have our breaker block. Okay, so basically you can see that price is now starting to come down, and this candle here basically came inside of not only past this bearish order block here, but it is inside of our breaker block, and it is also inside of our source. So it's actually a very good sign that price likes to test or come back up to the area that created the peak formation high. So this is our peak formation high over here. And we've identified our source. So the blue, the light blue, is our source. Okay. And our gold is our breaker block. So basically, is a broken order block. Okay, so breaker block is a broken order block, and now that has turned yellow, signifying to us that that is our breaker of institutional order flow. Okay, so we follow price down now, and this over here is our first bearish candle that was created in the move after the higher highs were created. Okay, so when price created the breaker, when price closed outside, price then tried to rally up, but you can notice with this wick here, price was rejected. So it sort of traded sideways, and we can see over here another bearish order block was created. So when this bearish order block over here was created, this move to the downside happened, a retest of the order block, and another order block was created over here. Okay, and you can see that this order block is responsible for this big move to the downside. Okay, now you'll notice that actually there's a green candle at the bottom here. It's basically like a doji candle, and although that looks like an order block, it's not actually an order block, because remember, an order block is only an order block when you see a move in a particular direction. So if it's a bearish order block, you'd want to see some movement to the downside to create the order block, or if it's a bullish order block, you'd want to see some move to the upside. Okay, so following our institutional order flow, we'll notice that this order block over here, this bearish order block, was responsible for this move to the downside, and price tried to rally up but was rejected with this long wick, and then price started to rally up. Notice how price then intersected over here with our new order block that was created, and when price tested that order block, it created another bearish order block, and price then rallied back down. Price then rallied back up into our order block, and you'll notice a new order block was created, basically intersecting with this previous order block over here, and then this move to the downside was responsible and created by this order block. Okay, so notice now that that is no longer more movement to the downside. So what do? We mark this candle up over here as our source. So that is our source candle, and this candle over here, this bearish order block, so that was the last order block before the move to the downside. Now notice price then has shifted and created a bullish order block over here. So this was our source, and a bullish order block was created right there, and price then rallied up. Notice how then price came and closed on that candle over there. So this candle over here closed outside of our previous last bearish order block before our source was created. So here is our bearish order block. We created the source. So the source is our peak formation low. Source is peak formation low. And basically price rallied up, closed outside of this bearish order block, and this bearish order block now becomes our breaker block. So that is now our breaker block right over here. Okay, so this won't happen all the time, but generally when the breaker block or the last broken order block before the source, so when they are close together, this is a good setup. This is a high probability setup than if, say, the source was quite higher than the breaker or vice versa. So you'd want basically the closer that they can intersect, the higher the probability of the setup. So once our breaker block was created, we still had this bullish order block, and that is another good confirmation to give us that we can take a trade knowing that we have followed the institutional bullish order flow. So we can then continue with our markup and say that this was our first bullish order block. Price then broke and created our breaker block over here. And here is our first, or second actually, bullish order block. So this was our first bullish order block, but price hadn't created the breaker. Once the breaker was created, this was our first bullish order block. Okay, so price then rallied up, and that rally up over here then pulled back and didn't touch our order block, but then price then rallied up. So this whole section over here, we could say, is an order block, because generally doji candles like that there's no price data inside of them, so we can just mark that up as our order block. This black candle over here, this bearish candle, we can say that and this green candle engulfed it, and that created our order block. Okay, so price rallied up and another order block over here was created on top of this one. Now they didn't intersect with each other, but price then continued up. So when price continued up, we had another bullish order block created. Price then rallied up and traded sideways for a bit, but maintained our order block at the top over here, and another order block over here was created. So when this order block here was created, it was responsible for this move to the upside of these two candles, and then we can see another order block. Although it took 3 candles, it's still an order block, a less powerful order block, but that is an order block nonetheless. You see an order block can take one candle, which is a powerful order block. It can take two candles. It can take 3, 4, even 5 candles it can take to create the order block. But the more candles used to create an order block, the less powerful the order block is. So that is still an order block, and that is also the last bearish candle before our source over here was created. So that over there is our source candle. So that is our source over there. And you can see that then price then fell right down and broke. So this candle over here, when it closed, that was the candle that created this order block into a breaker block. Okay, so basically price then continued downwards, and you can see that in certain cases, like for instance here, there is some consolidation, but generally we want to wait for price to come back up and retest our source. So you can see that although price came here and stopped, at some point we like price to come in to either our breaker or even into our source to test it, because that is a good sign that the market will reject if it bounces off of our source or bounces off of our breaker. So we would expect to see a rejection off of our source or off of our breaker over here. So we can follow that and see what happened here. So when price rallied down over here, so when price rallied down, it created this breaker block. And if we shift our breaker block across here, we will then see when price rallied up, it tested our breaker block and it did not test our source. Notice how the source and our breaker intersect with each other. So like I said, that is a high probability setup, and it's not always likely for price to test all the way to the top, but in this case it just tested our breaker and then rallied down. Okay, so when price rallied down, we can see that this order block, this bearish order block over here, was created. Okay, so that is a bearish order block, and you can see price then basically fell down, and there was no further move to the downside over here. Okay, so we can mark this candle over here as our source candle. This is our source candle because it is the lowest point of this move to the downside. Okay, so at the bottom of this source, notice how at the top here, this was the last green candle or the bearish order block before this big move to the downside. Okay, so this source was created, and over here we'll see that this is also a bullish order block right there. So that is a bullish order block. It basically took 2 candles to create that order block, but price then bounced off of that order block, and you can see it rejected our bearish order block over here. Okay, so in a case like this where price comes down and price then sort of starts to compress or consolidate, this is the market makers collecting and accumulating orders for buyers and sellers. Okay, so in the previous videos I showed you that you know, the market makers, they like to take price levels, certain price levels, like the institutional price levels. So if we put our institutional price level over here, you will notice that this over here is an 800 price institutional level. And when price came to this level, so it's quite an important one, the 800 level, and when price came to this level, it started to compress and consolidate over here. And when it was compressing and consolidating, you noticed also how it rejected off of our breaker block, okay? So when price rallied up, this order block was created, and this move to the downside was created. Now notice when this move to the downside over here was created, this move here to the downside from this order block, our source was created, okay, at the institutional level of 800, and then a bullish order block was created. Notice how price then came into our order block and tested our order block like that. So it tested our order block, and then price rejected and bounced off of our bullish order block and off of our source over here. Okay, so this is our source because this is our lowest candle that was responsible. So previously our source would have been over here on this candle. This candle here would have been our source, and then price rallied up. But because there was a lower candle with a wick that was lower than the previous one, now this has become our source. Price rallied up, rejected our bearish order block, price rallied down and bounced off of our bullish order block. Okay, price rallied up, still didn't close above our bearish order block over here, rejected, and you can see that here is actually another bullish order block. So that is another, let me just delete this one, but that encapsulates that one as well. So price rallied up, and it took two candles to create this order block over here, and price rallied up, rejected our bearish order block, it closed inside. Price didn't come in, there was a small fair value gap over there. If you see, it didn't close that fair value gap, but price then rallied up. Okay, notice now when price rallied up, we are expecting for price to reject and we want to sell. So we would generally want to look for a sell over here. And this way of trading is only in line with the institutions. Remember, we are retail traders. So there will be times when we will lose and we will think that we need to sell over here by our breaker or our source. And we will lose a trade based on the fact that we can only be 80% accurate, and we are not the market makers, so we don't control the markets. So we can only trade in line with how they trade, okay? So notice now, price rallied up over here and closed above our source. So that was the top of our source over there. This was our source, and price closed above. Okay, so now our source is broken. Okay, so it's the same concept when the breaker is created or the order block structure of the institutional order flow is broken. The same can be said for the source. So our source was broken. So now we are looking for institutional order flow that is bullish. And notice over here that this bullish order block was formed at the break of our source. So when these candles closed above, it consolidated a bit over here. And you can also notice that at this area over here is our 500 institutional level, okay? So we can expect some sort of hesitation and wait for price to continue upwards based on the fact that it broke our source and it hasn't gone lower. So it's at an institutional level, and the institutions will then look to buy the price up again. Okay, so I'm just going to clean some of this up so we can have a cleaner chart. So we are basically now following price as it's created our source, okay, at the bottom over here. So this is our last source before the move upwards, and our source over here was broken. So when this source was broken, we created this order block at this 500 institutional level, and then price rallied up from this order block over here, okay? And another order block was created. So we are following now the institutional order flow because it is bullish, okay? So price rallied up and created another order block over here, okay? So here is another order block that was created. So price rallied up, and again, another bullish order block was created over here, okay? And we can see that then price rallied up to the top here and then fell down. So what do? We create ourselves our source. So this over here is our source candle. So that is our source candle over there. And because price closed below on this candle over here, so this candle closed outside of our bullish order block, created our source, and when it closed outside of it, this bullish order block became our breaker block. Okay, so now we are looking for price to sell because the institutional order flow has changed. Okay, now notice also inside of our source and inside of our breaker, we will also see that this green candle over here, this green candle is actually also a bearish order block. Okay, so that is a bearish order block. It took 2 candles to create, and then notice how price came in, tried to test it, and rejected and fell off. And now again, this is also, it's a very large order block, but it's still an order block. So when price rejected off our top order block inside of our source, inside of our breaker, they're all intersected with each other. So when they intersect with the source, the breaker, and order blocks are created, that creates ourselves a nice high probability setup for price to accelerate downwards or upwards, depending on what structure we're looking at. So in this structure, this is a bearish structure. So we can see price then accelerate downwards. Okay, so you'll notice now price then continue downwards. And basically we can see that when price bounced over here, where did it bounce from? An order block. So this is an order block over here. And you can see price hadn't come down to this order block, so it hadn't been tested. So when an order block, like I said in the first video, when an order block has not had price tested, we know that that is a good sign that price can expect some reaction off that order block. So when price came from our source and our breaker over here, it came into our order block and bounced off of our order block. Okay, so when price bounced off, you can see there was a rally upwards, and this bullish order block was created over here. Okay, now notice we We haven't had a breaker yet because this was the last green or bearish order block we had, but we still have a source. So we still have a source. So this candle over here is our source because that is the lowest point before this move on the 4-hour chart. And we then have a bullish order block created over here. Okay, so when this bullish order block was created, price then rallied back up. And you can see another bullish order block was created. Okay, and inside of that, you will see that price then rallied down and created this bearish order block inside of our bullish order block. Okay, so this can be confusing to someone who's never traded this strategy before. So this will most likely have to be a 2-part video, or we can catch up on some more Zoom calls to reinforce the knowledge. But basically, we are trading from source to source. Okay, so when this source at the top of this peak formation high was created, we were then looking to sell. And then when this source at the bottom over here was created, we were then looking for buys into our next source. And then when this source was created, we were looking for sells. And then when this source was created, we were looking for buys. Okay, now, like I said, price sometimes likes to accumulate. Okay, and what can generally happen is you can look on lower time frames, might be able to get an entry, but generally in a market like this, when the price is compressed or accumulating orders, you generally want to not take too many trades because price is probably going to trade sideways. So it's best to just stay away from that specific pair while price is compressed like this. And so generally you'd want to trade something else. Maybe you'd like to have 2 pairs in your arsenal. I generally recommend 1 pair starting out with and 2 as an alternative pair. Okay, so when price is compressed like this, you don't want to take a trade in this zone, but you did take a trade that was possibly bullish off this order block here. Okay, so let's just clean this up over here. So we know that price was consolidating in this zone over here. And we had created ourselves a source at the bottom. And notice how price then rallied up, created some sort of compression over here, accumulation, sideways action. And price then came into our source again and also into this order block over here. Okay, and then price then rallied up. Okay, so when price rallied up inside of our source, this order block over here was created. So that is then an order block that was created, and then price rallied up. Okay, so at times, sometimes you'll have to pause your institutional order flow when there is some sort of compression, unless you are trading from source to source and you took your entry at the top or the bottom of the source, and it was a good setup with all of our confirmations intersecting like this. So when more intersections happen, then we like to say that is a high probability setup. Okay, so when price came down into our source, compression or accumulation, we created this order block once we tested our source and our bullish order block over here. Price then rallied up and created another bullish order block over here. So that was a bullish order block. And then price, as you can see, rallied up. Okay, so here is something important to show you. So let's just bring our breaker and our source across from this previous peak formation high. And you'll notice that when price came into our source and into our breaker, and this order block is also valid because price only tested it once, didn't close outside of it, so that's still a valid order block. So now not only when price came off of our source at this peak formation low over here, rallied up and created some bullish momentum with these bullish order flow, we can see it rallied into our breaker, it rallied into our bearish order block, and it rallied into our source. And notice how price then did not close above our source over here or our breaker. It was rejected and actually created another bearish order block. So this order block over here was created, and then this move to the downside over here was created from that movement. And if we bring this across, you'll see that this is a bullish order block, and when price came into it, it failed to close. Even though it wicked through, it failed to close below that order block, and price then rallied back up into our previous order block, and there was a little bit more wide-ranging compression over here, like this. So there was some wide-ranging compression, but when price first rallied up from this level, you will see that it tested our order block. Okay, now what I said about order blocks in the first video is that at either the 50% level of the order block or the opening candle of the order block is where you would want to look for a potential sell or potential buy, depending on the structure. In this case, we would be looking at the 50% sell or the opening green candle bearish order block, and that's where you would want to enter one of those two lines. And you can see price came into and touched it and then rallied back down, rallied back into our order block over here. So you can see that order block was respected over there. And when price rallied up, another order block over here was created. Okay, so this order block, when it was created, then this move to the downside was created. And notice again how our source was still tested again. Okay, so our source was tested again, and the more times the source is tested, the more likely chance it will be broken. So if it tests it, once or twice, a third time not normally lucky, so maybe you're lucky and you do get a third time test and a bounce off the source. But the more times the source is tested from a range or other source, it's likely to be broken. So when the first source gets tested, sure, it should hold, but more than at least 2 times, you might want to start thinking that the source is going to be broken. But in this case, our source held, and price then bounced off of our source. Okay, and you could see another, like everyone will probably spot, that is a W pattern, and sure, that is also confirmation that the market structure is shifting. So you are correct when you identify that, but we don't trade letters of the alphabet, we trade price action. So when this order block, it created this move to the downside, it tested our source over here, and we can also see that this order block over here was created and then created an immense push up to possibly test our breaker over here and test our source. So you can see that when our source over here was tested, price clipped through, it wicked into it, but failed to close outside of it. Okay, and you can also notice that there was an order block created over there. So that is a bullish order block, and you can see other action happening. And if we pull our price over here, we will see that that is an institutional price level of 200. Okay, so you can see that now we're intersecting with our source, and we've created a bullish order block, and price is interacting with our institutional price level, and we are failing to go lower, and instead our source is now broken. So we know what I said about our source breaking just now. We are now looking for buy opportunities because our source has been broken. So just like the breaker block changes the order flow, so too does the source. So when the source is broken, our order flow needs to change. Okay? So when price rallied up, where did it rally to? Our round number figure over here. So that is our round number figure. Price rejected our round number figure and rallied back down. Notice where it rallied back down into this order block over here and our 200 institutional level. Okay, and if I just pull the chart a little bit sideways, we can see that when it tested our 200 institutional level, we are still looking now for buys because our source was broken. So it tested this order block over here. And when it tested the order block, price then reacted and created another order block over there on our 200 institutional price level. Okay, notice how price then rallied up. Okay, where did it rally up into? It rejected our 800 institutional price level. Okay, so when price rallied up, it rejected our institutional price level, bounced back down to our round number figure over here, and created this order block over here. So this is an order block because this candle engulfed and there was a move to the upside, slight retracement back down, but still inside of this order block, and a move to the upside was created. So this actually is also an order block over here. So it took two candles to create this order block on this bearish candle, but it is an order block nonetheless, and price rallied up, still trading inside our 800 institutional price level. Price retraced back down. Where did it retrace back down? Into our order block. So this is a bullish order block, so it respected our order block. It hasn't closed outside. Price then rallied up again into our institutional level of 800, and again another order block, bullish order block, was created. So as you can see, price then broke through our institutional level of 800, and we can see over here that that is basically our 500 institutional price level, and at our 500 institutional price level we have an order block created over here. So notice how prices come into our institutional levels, and these order blocks have been created, and we are creating ourselves a multitude of bullish order blocks, creating a bullish order flow over here. And again, price then rallied up, created this bullish order block over here at our round number figure over here. So that is our round number figure. A little bit of a hesitation over here, but price then rallied off of our bullish order block over here. So price then was responsible for this lot. This order block over here was responsible for this big move to the upside. And where did finally price is currently trading now at our institutional level of 800 over here. Okay, so we can see now that price is starting to hesitate, and we haven't had a broke market structure yet, because here is our last bullish candle, bullish order block, sorry, for this up move, and we are waiting now for confirmation on the 4-hour chart to give us a confirmation that the institutional order flow has changed. So to me, this is still bullish, and it will remain bullish until the institutional order flow has changed. So again, this is about an 80% accuracy on your trades, and there's nothing out there that's going to give you that holy grail, that edge, that 90%, but it's sure damn better than trading with trend lines, harmonics, indicators, moving averages. This is the best we can do as retail traders. We don't work in banks or institutions or governments. We work behind our PC or our phones, and we are doing the best we can. And I'm helping you do this by showing you these institutional concepts. So this, in a nutshell, is the institutional order flow. And I might do a part 2 video, but for now, this is a lot to take in. I know this video has been probably longer than the other ones I've done, but it was necessary to show you all of this. And I know there will be questions just to reinforce the knowledge. So remember, we need to use our order blocks. And when the order block has been broken, we will say that that has become our breaker block. We have our source. So we trade generally from source to source, and we can actually mark this up as our potential source because it is the highest candle of this peak formation high over here. And we will just move our source as price. If it continues to go upwards, we will just move our source accordingly based on the price action. But for now, this is our source, and we are waiting for price to give us the signal that the institutional order flow has changed. So this can also be applied to lower time frame charts, the same method I've just showed you. So everything I've just done on this 4-hour chart, you can then apply to a 1 hour, a 30-minute chart. I wouldn't go lower than a 15-minute chart because it becomes very noisy. So I would use this concept mostly on the 4-hour chart, and I will do another video to explain it on lower time frames, but generally to start off with, 4-hour chart is good enough for everyone, and you can make some decent trades following the institutional order flow. So thank you for watching. Please comment, like, and subscribe onto my YouTube channel, and I'll see you in the next one.